Big tech earnings drive the moves on Wall Street. Google pops on a better-than-expected quarter, while slowing revenue growth drags Microsoft. The Dow surges for the 12th straight day as stocks continue to rally ahead of an expected quarter-point hike by the U.S. Fed. Asian markets trade mixed. The gift Nifty also implies a higher start for the Indian market. Oil hits fresh three-month highs. Brent holds above $83 a barrel on optimism over demand as China pledges to stimulate its economy. Tighter supply also pushes prices higher. This comes on the back of 4 weekly gains. And Tata Motors reports a solid first quarter driven by a beat in the Jaguar Land Rover business, while margin expands and revenue surges 57%. The company also announces the conversion of DVR shares to ordinary shares. 10 DVR shares will fetch 7 shares of Tata Motors. And L&T's first quarter revenue and EBITDA comfortably beats estimates, although margin misses expectations. The company's order book is now over 4 lakh crore rupees, and the board also announces a 10,000 crore rupee buyback at 3,000 rupees a share and approves a special dividend of 6 rupees apiece. In an earnings-heavy day today, keep an eye out for first quarter earnings from Axis Bank and Bajaj Finance. BPCL and pharma major Cipla, Dr. Reddy's will also report numbers today. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parikh. Those are the top headlines that we have for you as we get into this brand new trading session. There's a lot for us to talk about in terms of both global and domestic cues. But let's start off, as always, by taking a look at what's really happening with the global markets. For Asia, you have most markets are in the red this morning, but not too much of a loss. So the Hong Kong market is down around 70 points, so 0.3% there. The Taiwanese market's down around 0.4%. Kospi is the one which is probably looking the worst this morning, so that's seeing a cut of 0.8%. And for the rest of them, you have just around 0.1 to around 0.25% in terms of a loss coming through. The market which is holding up in the green from Asia, there's only one actually right now, which is the Straits Times in terms of, the markets that we really track closely. So the Straits is up around 0.2%, so largely lower as far as the Asian markets go. The SGX, the gift Nifty will come up for you, not the SGX, and that is indicating that the start for our own markets will be a little bit higher. So we're around 27 points higher in terms of what the implied open could look like. That's what's happening in terms of the Asian market action. But let's also talk about Wall Street now, because key indices did end higher ahead of the Fed's policy decision, which is expected later today. The Dow recorded its longest rally since 2017. Like we've been telling you, 12 straight days of gains, while the S&P 500 also hit a new high. If you look at the Nasdaq, that outperformed, closing the session around 0.6% higher. And among the mega caps, you had Google parent Alphabet, which surged in extended trading, this after posting earnings. And Microsoft shares, meanwhile, slipped after market hours because of slow cloud revenue growth. So that is some important, numbers that we're really tracking coming out of the U.S. But the much-awaited Fed policy decision on interest rates is just a few hours away, like we've been mentioning. And forecasters are feeling a little bit more optimistic about the economy this time around. We have Steve Leisman, who's here with all of the details. Steve.
There's a fairly consistent pattern where the most recent quarter, which is supposed to be terrible, ends up being revised up and somewhat less than terrible. And it's finally being projected forward, I think, now, where odds of a recession are being reduced by respondents to the survey. Take a look at the GDP forecast for 2023. In January, they thought it was going to be 0.4%. Now they're up to 1.23%. They've taken that out of the outlook for 2024, where they expected to have something of a bounce back from a really low rate. Now it's more along the line of 1.3%. Which is below potential, but far from a recession. You can see that if you look at the quarterly numbers, they were all pretty much revised up. A big number there, second quarter, the one we just finished, it had been 0.5% in May. Now, then it went to 1.4. Now it's at 1.7. I've seen numbers as high as 2.5 from some of the forecasters out there. And same with all the other numbers. They're nothing to write home about. They're all anemic, but they're also not negative, and they're above where they were. It's not a recession built in. Another reason respondents have a hard time forecasting a recession is what they think is going to happen to the unemployment rate. They see only a modest increase to still low levels. 3.6 now goes to 4, and then up to 4.41. So not not quite a percentage point built in terms of the deterioration in the job market. All of that leading to what we're talking about here, the decline in recession probabilities in this survey for the first time in a year, now below 50%. The low point had been 19% in December 2021. That went all the way up to 63 amid rampant fears of recession. Now it's back down, still elevated, but at 50% or 48%, the lowest since May 2022. And then look at the Fed outlook here, 5.13. Now they think it goes up by a little bit more than a quarter. There's some people that are baking in that second one, but the overall opinion is that it's one more hike and done, and then it sort of stays there through December. And then we've talked about, you did yesterday, those cuts built in for next year. Risk levels are still high, just not as high as they were, and the chance of the Fed doing too much, as you know, remains one of the risks they're talking about.
All right, Steve, thanks a lot for taking us through all of the details there. Let's also get you some commentary. This comes in from Paul McCauley of PIMCO on his expectations from the FOMC meet this time around. Listen in.
Markets have been in line with a more positive outlook, a soft landing outlook. So the markets have been there, but the Fed does not want to declare victory. That is the bottom line. They paused at the last meeting, but they put 2 more hikes into the projections for end of year. So the bottom line is the economy is doing better. Disinflation is happening. Soft landing is coming into vision. All of that is good news, but the Fed's not going to declare victory until it sees the whites of the eyes of a weaker labor market. It hasn't seen that yet, so I think they will tighten up.
All right, that is the global market action and opinion that we are tracking. But let's now talk about how all of these overnight cues that we just went through really impact our own markets, as well as the domestic cues that you should track ahead of today's trading session. We have Ekta, Surbi and Nigel here to prep us up for this trading session. Guys, a very good morning to all of you. Ekta, coming to you first. We saw a very, very flat close yesterday. Take us through everything we should watch this morning.
Morning, Pavitra. Yes, like you mentioned, the Nifty consolidated in yesterday's trading session. It closed with minor gains. It has, in fact, corrected from that 1,992 intraday high that we saw on 20th of July due to mixed corporate numbers, uncertainty ahead of the Fed. Remember that Adrian Movat, in fact, was talking to us yesterday, and that's exactly what he said, that India's results season has been a little disappointing, hence might see consolidation, and that seems to be playing out. But the one important cue, which is probably going to come back as a resurgence or maybe some upside for our markets, is the FIIs that have net bought after 2 consecutive sessions of selling. So they net bought around 1,088 odd crores in the cash market yesterday. DIIs net sold around 333.7 crores. So maybe FIIs resuming their buying would help in terms of the Nifty resuming its uptrend as well. Now, in terms of the global markets, the US Fed meet as well as earnings would be in focus. US closed higher. We had Alphabet, which gained post numbers, Microsoft, which corrected. Asia is largely lower ahead of the Fed decision. SGX is indicating a quiet start as well. For our markets, stock-specific action continues. So L&T meet estimates and they've approved a 10,000 crore buyback. Tata Motors, 41% jump in revenue. The company has announced a conversion of DVR shares to ordinary. Today we have results from Axis, Bajaj Finance, BPCL, Cipla, Dr. Reddy's, PNB, to name a few. So that will continue to be in focus. Just a quick word on the macros. IMF has revised FY24 India's GDP growth forecast to 6.1%, which is 20 basis points higher than the April estimate. So that would definitely bode well in the background. The big cues for our markets continue to be earnings plus the Fed beat.
All right, Ekta, thanks a lot for taking us through all of those cues. Surbi is also here to, point out all of the individual stocks that we should watch for. Surbi, like Ekta was just pointing out, it is going to be a lot about the individual earnings that came through, some big ones as well post-market as yesterday. So take us through the list.
Thanks so much for that. So some big earnings. Let's start with Tata Motors first. The revenues were up 42% on a year-on-year basis. EBITDA margins came in at 13%. Additionally, the company is going to cancel the DVR shares and issue ordinary shares. So they're going to issue 7 ordinary shares for every 10 DVR shares held. L&T, the revenues were up 34% on a year-on-year basis. EBITDA margins came in at 10%. Additionally, the board has approved a buyback of up to 10,000 crores. SBI Life, the VNB margins misses street expectations, came in at 28.8% versus 30.4% same time last year. And APE saw a growth of 4.5% on a year-on-year basis. Dixon Tech, the revenue was up nearly 15%. Margins came in lower by 50 basis points at 4% versus 3.5%. Amber Enterprises, the revenue was down 7% on a year-on-year basis, but margins were up 240 basis points, came in at 7.8%. And lastly, Cyient, on a sequential basis, the revenue was down nearly 4%, and the EBIT margins came in at 14.7% versus 14.2% in the previous quarter.
All right, that is a long list of earnings reactions. Surbi, thanks a lot. We're going to watch for all of these in today's trading session. And like Ekta was pointing out, a lot of earnings that will be posted today as well. So there's a lot of stock-specific action that we should look at. But finally, Nigel is also here to run us through all of the cues that we should really focus on from the futures and options space. Hi, Nigel. What are you looking at?
Well, morning, Pavitra. You know, the last few days we've been making lower lows. So that's a bit of a worry from a bullish perspective. The bears actually will be feeling quite good. The FIs, well, in the FNO space, they added some short positions and they unwound some long positions. And that's where the short positioning has now moved to around 34%. Now, the PCR is more or less stable at around 0.8 approximately, but there is call writing that we're seeing at around the 19,700 odd mark. So the crucial levels come up for you on the screen. Let's see how it goes. But based on tonight's outcome of the Fed, we'll get further market direction. For the time being, some range-bound trade. Back to you.
All right, some range-bound trade after the very sort of flat moves that we saw yesterday. Nigel, thanks a lot for taking us through all of those cues. With that, we do need to get into a short break. But like we've been telling you, the big earnings reactions to watch for today are definitely Tata Motors as well as L&T after they posted Q1 results yesterday. So we're going to bring you the fine print when we come back. Welcome back. You're still tuned into Power Breakfast, and let's now talk about those big earnings that came through post-market close yesterday. We had L&T, which reported a good set of first quarter numbers. We saw revenue and EBITDA comfortably beating street estimates, and a 10,000 crore rupee buyback has also been announced with a special dividend along with that. So Vivek is here to fill us in with all of the details. Vivek, looks good on pretty much all fronts, right?
Absolutely. Good morning. Very, very strong set of numbers coming in from L&T. The only base, being the core margin miss that has actually come in. So talking about the numbers, it's a clear beat as far as revenues, core EBITDA as well as PAT is concerned versus our own poll. Order inflow trends, the key positive surprise at 65,520 crore rupees, up 57% on a year-on-year basis. The key negative, like we pointed out, being the core margin miss. According to Morgan Stanley, the infra margins have come in at 3.8%. This is because of the fact that the company right now is looking at a weak job mix, and some of the legacy projects are being executed now at lower margins. So management in the conference call indicated that margin recovery will happen in the fourth quarter. So another couple of quarters of weak margin is what we can expect from L&T. Now talking about the numbers themselves, the revenue is high by almost 34%, clear beat to our own poll. Revenues coming in at 47,882 crore. EBITDA jumping up almost 23%, coming in at 4,869 crore. Margins muted 10.2% versus 11% on a year-on-year basis, and profitability up almost 46%. Like we spoke about the buyback, 10,000 crore buyback. This is the first buyback in the history of L&T. The price the company has kept via the tender offer is up to 3,000 rupees a share, and the total buyback is almost 2.4% of the total equity of the company. Along with that, like you said, a special dividend of 6 rupees a share. And now when you're talking about the total order book of the company, for the first time it has crossed 4 lakh crore, giving significant revenue visibility for L&T going forward.
All right, Vivek, thanks a lot for getting us all of those details. In fact, L&T was one of the weaker stocks in trade yesterday. It saw kind of over 1.5%. So it'll be interesting to see how this one fares in trade today. But staying with earnings, Tata Motors is the other one, reported a solid set of Q1 numbers driven by the strong beat that we saw in the Jaguar Land Rover business. So that's what really pushed the performance higher. Sonia is here with the fine print for this quarter. Sonia.
Well, thanks a lot for that. It was a very strong showing from the Jaguar Land Rover business, which aided the overall numbers as well. A big beat on the numbers, both on the top line as well as the bottom line for Jaguar Land Rover. Consolidated business revenues went up over 42%. The margins have improved 700 basis points, coming in at 14.4%. And it's a turnaround quarter for Tata Motors. On a year-on-year basis, the company posted a net profit of 3,200 crores compared to a loss of 5,000 crores same time last year. A large portion of this was due to Jaguar Land Rover, where the revenues went up 57%. The EBITDA went up 960 basis points year-on-year, coming in at 16.3%. And the EBIT margins have improved to 8.6% versus 6.3% last quarter. Not just that, the net debt for JLR has also come down to £2.5 billion as on the 30th of June. Now, the company says they expect the demand to sequentially improve in FY24 for the CV business, and the net automotive debt has reduced to 41,700 crores. But the important bit for Tata Motors really is that now if you are a DVR shareholder, then for 10 DVR shares that you hold, you will get 7 Tata Motors shares. So there will no more be Tata Motors DVR. It will all be, converted into Tata Motors shares, which is a big positive for Tata Motors shareholders.
All right, so that is all the important news coming through on Tata Motors. Sonia, thanks a lot for taking us through those details. With that, it is time for another break. But when we come back, we're going to shift focus from equities and talk all about the commodity markets. Stay tuned for that. Welcome back. Let's talk commodities now. Manisha is here to fill us in with all of the action that she's looking at. Manisha, good morning. What should we track ahead of the session today?
Hi, Pavitra. Thank you so much for that. Well, I'm looking at the US dollar index itself, which has gone slightly softer ahead of the US Fed meeting today. So metals have gained on back of that. Also, China has pledged more economic support for the property sector. There are already shortages in production. And the S&P has raised global car manufacturing forecast for this year up to 2025. And that clearly has been supportive. Is the reason you have the steel prices trading at a 1-month highs, copper is trading at a 2-week highs. And we've seen gains come in for other metals like aluminum, nickel, etc. The strength also continues for the crude oil prices. We are still holding around 3-month highs. Markets are going to be watching out for the U.S. inventory data that comes in today. And of course, the U.S. Fed meeting announcement and the Powell speech are a couple of things that the street will be taking cues from. The markets do believe that crude prices are headed on the higher side now because of the tightness in supplies that we see coming in from the OPEC and allies output cuts.
All right, Manisha, thanks a lot for getting us all of that action from the commodity space. But with that, we're going to wind down on this edition of Power Breakfast with the news that Asian markets are pretty mixed, most of them lower as we speak. The GIFT Nifty, however, indicates around a 25-point uptick at the start of this trading session. Thanks for tuning into Power Breakfast via Bazaar Morning Call up into.